Okay, everyone, it is 8:05. So thank you so much for attending our presentation today on investing in Calgary real estate, why buy Calgary. Alex Wilson here, and then my wealth builder partners, Kyle and Niesh. We're all investors in Calgary. We continue to see great upside in the Calgary market, and we're going to get into why. So we'll jump right in here. So first of all, myself, I am Alex Wilson, broker owner of Remax Wealth Builders Real Estate. Been selling real estate in Toronto for over 12 years. Number one real estate agent in Ontario, individual transactions in 2019. I still need to update the slide. 2021, I was number 3 in all of Canada. Number 14 Remax agent in Canada, individual 2022, number 34 Remax agent worldwide 2020, inducted into the Remax Hall of Fame, awarded the Remax Lifetime Achievement Award of 35, awarded Remax Circle of Legends Award. None of that's relevant to what we're talking about today. What we're talking about is investing and making you all money, and that's where we've all been successful. Initially, I turned a deposit of $39,300 into a $14 million portfolio, and that has continued to grow, which I'm going to show you in the next slide. 14 condos, High Park triplex, apartment building in Hamilton, and there's actually been some more purchases added to that. And I actually updated my portfolio today on the next slide. Now, why I show you my portfolio is I want to get you in the mindset of investing over the long term, and also transparency as well. So this is everything I own, my entire real estate portfolio, excluding my principal residence. So current market value of that is just over $17 million in current value. But I don't care about that number. What I like is the number in 30 years. Why 30 years is relevant to me? Because in 30 years, all my mortgages will be paid off. Why will they be paid off? Is because mortgages are amortized over 30-year periods once you have 20% down in a property. So over 30 years, all these tenanted properties, the mortgage will be paid off by the tenants that live in the properties. And during that time, the properties are going to go up in value. And I just calculate my portfolio at a conservative 3% annual growth rate. So in 30 years, my portfolio will be worth over $42 million. But, then we have the Kyle slide. So I'm going to talk a little bit more about that in a second, but Kyle, go in and talk about yourself. And then we'll go into your portfolio and everything, and then we'll talk about inflation.
Perfect. Thanks, Alex. So my name is Kyle Dovigi. I'm a member of the Remax Wealth Builders team. I'm a licensed real estate agent in Ontario and Alberta as well. Just like Alex, we started investing in the same project, started investing in 2012. My portfolio is not quite as big, but I was working a regular job like that, and just goes to prove that, anyone can do this. So now I'm actually a landlord and owner of 6 properties across Canada. I've got 5 in the GTA, and then my most recent purchase was in Calgary as well. I don't come from the real estate industry though. Originally, I was running the lottery. So before, I was actually running Lotto 649 and Lotto Max draws. And I switched from that industry because BMO actually did a study a couple of years ago. Over a third of people were planning on winning the lottery to fund their retirement. That's a sad statistic for me. People are literally gambling on their future. So partnered with Alex and moved away from that industry to help people actually build wealth. And that's what I do every day now. People aren't gambling on their future. They're working to build their wealth, generational wealth over time now. And I've been really successful at that. I've helped over 100 people this year alone to invest in real estate, primarily in the Calgary marketplace. And we'll get into more details about why. And similar to Alex, so good.
Oh yeah, continue. Yep.
Yeah, similar to Alex, I turned a small deposit into a significant real estate portfolio. No magic sauce, no secret, just took investing and time.
And that's where, and Kyle and I, we bought our first investment condos in 2012, same building. And what we see in Calgary is what we saw in Ontario and Toronto in 2012, in that we had an opportunity. We were in our 20s. We didn't have much money. And there was a small deposit opportunity. Yeah, 39,300. I can't get you anything in Toronto for 39,300. And the property's cash flowed at that time. So we take that same thinking, we're able to invest in with a low deposit in a market that we see upside in. We'll talk more about why we see upside in that market, and we're able to generate cash flow positive opportunities. That's the key to the Calgary market. We're not selling anything sexy or crazy here today. We're just applying long-term real estate fundamentals, and that's what we're getting into. And that's why we start this and we talk about, okay, what's a portfolio worth in 10, 20, 30 years? And I have a large portfolio, but I sell real estate every day, and I've been doing that for 12 years now, actually 14 years now. So I'm like a Bay Street trader. I'm just gonna have something that's different, right? Kyle has more of a person, like a person. Our typical client may own 4, 5, 6 properties. Kyle's portfolio is more in line with what you typically have. But anyone on this call can achieve what I have, what Kyle has, and what Niesh has. Niesh has been investing with us now for coming on 2 years now, and he's rapidly grown his portfolio as well. And Niesh, why don't you talk about, you're out of the three of us, you're the most invested in Calgary. So why don't you talk about your investments in Calgary?
Yeah, absolutely. So my investment journey started back in 2006, again, in my principal residence, and then had a chance to purchase another property in Toronto. But it was really after connecting with Alex and Kyle that I started to see other opportunities, specifically out west. And I sat in on one of Alex's webinars, and he and I were colleagues, but we weren't working together just yet. But after listening to his story and looking at the numbers, it made a ton of sense to invest out west, simply because of the challenges in investing in Ontario and all the implications financially that you would have to kind of go through. So after connecting with Alex, we looked at one property initially. It's actually the most recent property that closed back in September, August. And through that purchase, I was really able to see the growth potential in Calgary. And then collectively now, including my family, we have 6 investments out in Calgary. So, and this all just happened since June of 2021. So you don't have to, do this over a 5-year period if you don't want to. Of course, that's fine. But if you see opportunities and you see the potential of those opportunities, it's really a good, it's really good to jump on them, because we don't know how long these things are going to last, right? So the properties that I have right now, they're in different parts of Calgary, and I'm excited to talk about a few of those a little later on. But townhouses, condos, and different vehicles, I call them, is really helping me build up my portfolio, and that's really what we want to share with you today, and hopefully get you on board as well.
Great. So here's Kyle's portfolio. Kyle's portfolio. And again, just showing transparency here, what we own, and it's just simple math. It's simple math. And he's got the great point down there. This doesn't include any cash flow or principal repayment, right? We're just looking at the value to showcase what the property is going to be worth in 30 years when the mortgages are paid off. Try to keep it as simple as possible. So in just 2022, we've helped over 300 people from across Canada invest in Calgary and sold over 150 million in pre-construction units. And our team has personally invested in 10 pre-construction projects. So our money is where our mouth is when we're talking about Calgary. We have all invested in the city. Now, where I talked about, because we hear inflation's forefront in the news. So when I say my portfolio is going to be worth over $42 million in 30 years, we have to take into account inflation. So what we want, there's time value of money. This is my economics background talking. So there's time value of money. And what's that purchasing power actually going to be? So what does $42 million in 30 years mean in today's dollars? So that means over $23 million. So that means I'll have the purchasing power of $23 million today in 30 years. So when you take those concepts and you put them forward, you can really think about your retirement and how you're going to take care of your future generations, or how you're going to fund your children's education fund. How are you going to fund when maybe you need to get extra living care when you're older? We all have older parents. We've seen the cost that can be associated with taking care of those parents, or maybe those parents don't have the same savings that we have, or they didn't make the same decisions that we made. That's why I stress on this, why it's so important. Pension funds mean nothing anymore. If you look at Sears, if you look at Nortel, those pension funds, if you were working those companies, you thought you were protected, and then the companies went bankrupt. When when a company goes bankrupt, your pension isn't first in line for the creditors. You're down the totem pole, and then you have to end up taking a fraction of what you're expected for your pension. So imagine your pension gets shut down when you're 75 years old, and you thought the company was going to take care of you, but the company doesn't exist anymore. And now you're going to get a fraction of the money that they had promised you. These are important things to take into consideration. And that's what's driven me to invest in real estate. And I know Cal and Niesh feel the same way. So when I look at my portfolio and the value it's going to be in 30 years, what's my purchasing power once it's all paid off? $23 million. Again, all paid off by other people living in the property. And we're doing a service, and I mean that in a positive way. We're providing roofs over heads. We're providing roofs over heads for whether it's individuals that are new to Canada, whether it's young couples that are starting out, whether it's people that are renovating their homes, people that came onto challenging times so they can't purchase a property. Divorcees. We're providing roofs for people that they've sold their home. They don't want to own real estate anymore, so now they're just having a rental lifestyle. So by investing in real estate, you're providing a roof over someone's head. That's what you're doing. And then the transaction is they're going to give you a monthly amount for providing that roof over your head. That's the mindset to get into. When you think it over long term, you can build incredible wealth. If you think of it in the short term, you could lose money. And we're seeing that today. And we're seeing that today. When you hit these challenging times, right? If you're forced to sell, that's when you lose money. So never be in a situation where you're forced to sell. As long as you hold the property over a long term, you're going to become incredibly wealthy. If you sell early, or you plan just to flip something and you hit a downturn, well, that's where you lose money. So as I said, portfolio $23 million in today's purchasing power, but provided just a 5% annual rate of return on that. That means I can pay myself out of that portfolio over $1.1 million per year. Now you want to reinvest 2% of that to protect against inflation. So that means I can live off of $697,000 per year and still have the entire portfolio value in today's purchasing power and pass it on to future generations. It's incredibly powerful stuff. And if my number seems too big, to show you what you can still do, here's it broken down in $1 million, $2 million, $3 million, $4 million real estate portfolios. The payouts that you can give yourself in today's purchasing power, $70,000 if you have $1 million portfolio, $2 million portfolio today, $140,000, $3 million portfolio today, $210,000. Again, with time, you can achieve incredible wealth over the long run and secure your future. I've done this. Use your home to create a pension fund. So this is, if you've had a run up in value on your house and you have a small mortgage on your current principal residence, you can use that residence to invest in real estate. So use your house as a wealth builder versus just being a wealth sponge. Trying a new thing here. Let's see if it's going to work. And what I mean by that is, that's great if my house is worth a lot of money, but if I'm not capitalizing on that, it's not making me any return on my investment. Versus if I sell the house, that's great, then I can reinvest it, but then I need to buy something else. That doesn't work either. So, but if I take out a home equity line of credit on the property and then reinvest those funds, then I can make a return on that property. And that's how you can leverage existing equity now to fund your retirement. So each $350,000 condo represents $24,000 of annual income in 30 years in your retirement years. That's factoring in a 3% compounded annual growth rate. So when you start thinking like that, that's how you understand how you build a portfolio. Now that I've bored you enough about building a real estate portfolio, I hope that you're in the real estate investment mindset. Now we talk about why we're investing in Calgary. If you do have any questions, you can put the questions in the Q&A box. We'll answer those at the end of the presentation. So why Calgary? Number 1 most livable city in North America, 4th most livable city in the world, top 5 on the Economist Intelligent Unit's Global Livability Index, located in the foothills of the Canadian Rockies. Loads of green space, lowest cost of living, 2nd lowest cost of living of Canadian cities, and 9th lowest in North America. These are the things I've looked at when I started looking at investing in Calgary in 2019. Even though you associate Calgary with oil and gas, it's an incredible nature sanctuary. Extensive outdoor path network. Has the 2nd healthiest lifestyle for life satisfaction in all major Canadian cities, and the steadiest city in Canada. So I get I want to call it hate mail. I got hate mail about the weather in Calgary, and people are like, oh, it's so cold. You know what? It's about the same temperature as Montreal, but it has much better weather than Montreal in the winter. In that you get sun. It's sunny in Calgary. It's the same, about roughly the same average temperature, but it's much more sunny in Calgary than it is in Montreal, and you don't get those torrential snowstorms. So Calgary it's going to be colder than Toronto, but it's a nice dry cold, not damp, and you're getting sun. It's not going to be cloudy. And just outside of the city, you have a truly world-class area. Banff National Park, you have 5 world-class ski resorts within 2 hours, over 200 hiking trails in Banff National Park, and it's only an hour and a half to get there. Unlike when I say, hey, it's 2 hours to get to Muskoka north of Toronto, yeah, you got to leave at 3 a.m. to have no traffic. This is at any time of day you can get to Banff in an hour and a half. They don't have the same traffic issues. So why are Alex and Kyle and Niesh? Didn't have to take this slide. Sorry, Niesh. Why are Alex, Kyle, and Niesh investing in Calgary? So when we look at the population growth stats, so again, I said, being a landlord, you are doing a service to the community. You are providing a roof over heads. So if you're providing roofs over heads, you want to be in an area where population is growing. And we're seeing that in Calgary. So 2018 to 2019, 46,000 people, 2019 to 2020, 44,000 people, 2020 to 2021, 34,000 people. So even during the pandemic, you saw population growth in Calgary, unlike Toronto, where we saw the population actually decrease. Again, I have no worries about Toronto. I still invest in Toronto, but we're seeing continuously population growth in Calgary. This is important because we're investing in roofs over heads, and I'm going to show you some dramatic numbers very, very soon. Calgary has the highest millionaires per capita of major Canadian cities, and Calgary represents the highest wages and salaries per employee in the country at $66,261. That was in 2018. But this is where things start getting crazy. So again, if we take a long-term view and we look at what's happening with population growth, Alberta is going to lead Canada in population growth over the next 2 decades. So Alberta's, and these are Statistics Canada numbers. Alberta's population is set to increase by 48% and will be larger than BC by 2034, versus Ontario's population was set to increase by 24%. There is going to be a swing of 1 million people when I look at the population of Alberta compared to BC. Currently, right now, Alberta has, what is it, the exact number? 600,000 people less than BC. In 2 decades, it'll have 400,000 more people than than BC. So a net swing of 1 million people. But even on top of that, when we look at Calgary specifically, so I said Alberta is going to go by 48%. Well, the city of Calgary is going to go by 62.5% over the next 2 decades. It currently has a population of 1.6 million people. Well, it's going to add another 1 million people more over the next 20 years. Isn't that absolutely crazy? don't you want to be the person that's investing in the roof over the head that all those people are going to live in? When you look at these crazy population growth stats, you want to be investing in that market where we're going to see explosive population growth. Not only are they going to have population growth, they have a very robust economy. So Toronto has the largest economy. Then you have Montreal, Vancouver. But right after that is Calgary. So Calgary has the fourth largest economy in Canada. Its economy is bigger than Saskatchewan. Its economy is bigger than Manitoba. So actual provinces. It has a huge economy. It actually has the most head offices per capita in Canada. Second most head offices in Canada are in Calgary after Toronto. So when we look at that, we look at why. So we saw the population growth, we saw the economy. So these are positive things moving in the future. Well, the main thing about real estate or any investing is you want to buy low and sell high. So when we started investing in Calgary in 2019, I'm still on my slide, right, guys? Okay, good. Thanks. We split the slides up so we can all talk roughly an equal amount. So sometimes I go rampant, so I just want to make sure. Feel free to stop me when it's not my slide anymore. I've just done so many of these presentations. So we saw new condo sales drop. They dropped in 2017 by prices dropped by 21%. Now, why did they drop? Well, you had a crash in the oil and gas industry. You had the prices fall out. And what happened in 2014 is you had sky high oil prices, and you had massive construction happen in the Calgary market in the commercial space. But when oil prices crash, and you have mass layoffs in the oil and gas industry. But we're past that. So we're past those layoffs. You can't lay the oil and gas companies that are in Calgary. They're as lean as they can be. Those layoffs are all done, and you had significant office space that was overbuilt, and you had all this extra office capacity. And what Calgary has been doing, it's been transforming its economy over since 2017. Another thing to factor in is, so when we look at oil and gas prices now, due to the conflict in Europe, you're not seeing new investment in the oil sands. You're not going to see new investment in the oil sands. So we're seeing great royalties from the oil sands into the Alberta economy, which you're going to get more into. But the Alberta and Calgary economy is diversified away from that, and we're not going to see new investment in actual oil sands construction. And we'll get into a little bit more of that in the following slides. But one of the biggest issues that Alberta and Calgary have is that it's landlocked. So they have a distribution issue with their oil. And what we also saw when we started investing is that they're working on fixing a distribution issue. So right now, the majority of oil that we have in Canada goes to the US. And we can't reach global markets with the oil, with pipelines. You can only reach it via, for the most part, rail or transport truck, because there's no open water ports in Alberta. But we've all, as Canadians, own something called the Trans Mountain Pipeline. So the Trans Mountain Pipeline, which is scheduled to complete in 2023, it will increase our international exports and allow us to export more oil to the international markets. So we're not subject to the huge ups and downs of oil prices. So for example, Alberta oil in 2020 was selling less than 50% than Texas oil, because our only customer was the US. Now, when the Trans Mountain Pipeline is done, we'll be able to export more of that oil to the international markets, which will help us regulate the pricing more of the Alberta oil, which is, again, massive for the Calgary economy, massive for the Canadian economy. That's the big distribution issue. And the good thing for us, in talking about distribution, is that with the global conflict, and when you look at all the different markets where oil comes from, Canada has the largest supply of oil, largest reserves of oil in the top 10. When you look at the top 10, Canada is the largest and the only country that's a first world country that is not run by an autocrat or a dictator. So now when you're other countries and you're looking for safe and secure commodities, energy, Europe, for example, where are you going to buy them from? You're going to be looking at buying them from safe, secure sources, and that's what Canada has to offer. So you're going to see demand for our oil and gas products accelerate into the future, specifically ours. So I mentioned that oil and gas fell. Oh, this is where Cal comes in now. Yes, it's Cal's slide. So I'll give a lead into. I mentioned that oil and gas fell, and then you had these huge vacancy issues in Calgary in 2017, and that's where Alberta and Calgary started to rebrand itself and diversify away from the oil and gas industry. And you're seeing tremendous growth in other industries. And I'll let Kyle take over here now.
Yeah, but to add on to that, Alex, like oil and gas is still very important to the economy overall. You know, for every dollar that the price of oil is over $70, then that's $500 million surplus to the province of Alberta. So Alberta was definitely built on oil dollars, but it's not going to be the future of the economy anymore. Like Alex said, there aren't going to be new oil sands projects. We're going to continue to take the oil from the ground, but the province and Calgary now needs to look to other areas of opportunity. And they're doing that in technology, in tech. So you're really starting to see tons of tech flood into Calgary. And Calgary, from a tech worker perspective, had actually outpaced pretty much everywhere else in North America, which is pretty unbelievable because Calgary is not normally known as a tech center, right? It was actually ranked in the global top 10 of most attractive cities for workers for many different reasons. But, you know, cost of living, they have an incredibly educated population. Many employers have actually cited that of why they've moved operations, but not just in, say, oil trades. This is actually in STEM, you know, which is going to be driving a lot of the economic development moving forward. Science, technology, engineering, math. These are a lot of the fields that you're going to need, even in IT and those sorts of fields as well. So there's incredibly low cost office space in Calgary because Alex mentioned there was huge overbuilding of that environment, you know, back in the 90s, early 2000s, and then with oil crashing, there was tons of consolidation in the oil and gas field, and many of those people either went out of business or had consolidated with other people. So there's huge vacancy, you know, up to 30%. It's coming down now on that side of things, on the commercial office space. So it presents huge opportunity for these companies looking for low cost centers to set up operations. And Calgary is absolutely seeing that. You know, you have 435 technology companies. These aren't the really big companies for the most part. You are seeing like Amazon and those sorts of companies moving in, but these are the small to medium-sized companies that are growing and prospering from this IT environment that has really grown over the last couple of years, because most of those companies are startups. Not all of them are going to be successful, but there have been several now that have turned into unicorns, meaning billion-dollar companies. And there's massive openings for jobs there as well. You know, Calgary can't get enough workers as it is. So you're seeing huge demand and tons of job opportunities. And normally I talk to investors, you know, all the time, but I'm actually talking to a lot of people considering moving to Calgary because low cost of living, but there's remote work possibilities and tons of good local jobs there as well. So you're really starting to see that side of things grow even faster than it had been. But again, coming back to the costing perspective, like downtown Calgary, leases are around $17 a foot for commercial office space. Compare that to Toronto, that's about $35 a foot. Vancouver's about $44 a foot. You know, when you're leasing out floors and buildings, this is a massive cost to these companies. So very, very attractive for Calgary as a city, especially when there are these startup companies that are really watching every dollar. And instead of spending it on rent, they can spend it on more IT, getting more people in to help grow their operations. And grow they definitely have, because Calgary, the latest unicorn, that billion-dollar company status was Neo Financial. This was just a couple months ago. And you're continuing to see this in Calgary where companies are starting operations, but they're continuing to add on there. They're adding employees that are expanding operations. And you saw this with Neo Financial, an amazing success story there. Next slide, Alex. And Amazon, the big daddy. You know, not only do they have a distribution center there, they absolutely do, but they're setting up a new cloud computing hub there. This is a $4 billion investment. This is only the second in Canada. The other one's actually in Montreal. So you can be pretty darn sure that Amazon has absolutely studied the country to see where the best possible cities are available for them. And they chose Calgary. Like that's a massive vote of confidence for the city. And also going to be adding over 900 new jobs there as well. But then TELUS, one of the big telecom companies, they just opened up a brand new headquarters. They built an office tower, 60 stories, TELUS Sky it's called, in downtown Calgary. They're going to be hiring 8,500 people in Alberta. And this is part of a massive investment that they have overall in the province, but that's concentrated very heavily in Calgary, looking at about $17 billion. And then another big company, WestJet, they're making Calgary their global connection hub. So for any international flights connections, all of that has to go through Calgary. That's what they just announced. I think it was about a month and a half or 2 months ago. And they're making a multi-billion-dollar investment in Calgary and the airport and the facilities around it as well. And they're moving their big planes, the 787 Dreamliners, to Calgary to be flying out of that hub. And again, it's jobs. Continuing to see these companies add operations, adding jobs. So 1,000 new jobs from WestJet being added there as well.
And I want to jump in here and reference one point, and this was brought up to me a few months ago, and I never even thought of it, but it's completely relevant. It was a corporate person that brought this up to me. There are really only 4 international airports in Canada, and these were identified during COVID because there was only 4 international airports open: Toronto, Montreal, Vancouver, Calgary. Why this is relevant, and even factoring in this WestJet in regards to real, they're going to make this their global connection hub. You know, when you think of the U.S., you think of connection hubs. You think of Chicago. You think of Atlanta. You think of LAX. These are massive connection hubs, and when you have connection hubs, that's what corporations look for where they want to open head offices. International companies, because people take direct flights. They don't want to be connecting through. So that's where people ask us, "Oh, Alex, where do you see your next opportunity?" You know, Winnipeg isn't getting international head offices. It's not happening. This is where we see the opportunity in Calgary, because they are getting the international head offices, and Kyle's going to get into some of these international IT firms. But it's a really boring thing to think of, an airport. But it's a massive thing when we think about the transportation and the direct line that people can come through. These aren't things that we think of. What I mean is, you know, regular people don't think like, oh, how do people get to Calgary? But that's what corporate people think when they're looking at moving jobs there. Or internationals are thinking like, well, how am I going to get back to home to visit family in my other country? Oh, can I fly directly there? Right? These are big things. So I'll give it back to.
Exactly. And it's not just people moving through the airports, it's goods as well. So the airports bring tons of trade to the surrounding area around it in the northwest and northeast areas of Calgary too. So huge benefits there as well. But speaking of aircraft companies, de Havilland, this one's actually really big in my opinion, where they're moving their operations from Toronto to Calgary, to just outside of Calgary, building a massive new complex there. It's over 1,500 acres of land. There's going to be a new runway, assembly facility, even a museum, training facility like a university. So this is a company not setting up their operations, moving from Toronto to a low-cost center, and that's going to be bringing 1,500 new jobs. So anyone that's invested on the east side of Calgary in Chestermere, I think this is going to be a huge bonus for your investments overall.
And I'm jumping as well because de Havilland is not a household name, but you want to know what kind of aircrafts they build? They build water bombers. Okay, so if we look at climate change and we look at global warming and we look at forest fires, which are rampant around the world, there is strong demand for water bombers around the world moving forward, and that's what what they make other things too, but that's what they're known for is their water bombers. So I just wanted to put that in there because you may not recognize the name, but they are massive.
And again, it's not sexy. These aren't the 787 Dreamliners that they're building, but these are very practical, and there's huge money and demand for these sorts of goods moving into Calgary. But Infosys, another big IT company, they build next generation digital services and a big consulting firm. They opened a digital center in downtown Calgary, and they're actually doubling their jobs. They had an announcement, it was probably about a year ago, that they were setting that up, maybe a little bit longer. And now they're doubling the number of people there. So again, seeing that trend of continuing to add jobs and expanding operations in Calgary. So looking to have the workforce of about 8,000 in Canada by 2025. And Fastest, this is another company I'd never really heard of before, but they're a big company. They do next generation digital technology services. Again, new delivery center, downtown Calgary, 1,000 jobs that are hiring for in the next 2 years. And these aren't service jobs, these are well-paying jobs, white collar, oftentimes. And that brings a lot of money into the local economy. Another one, SideTrade, never heard of them before, but they actually do invoicing. It's artificial intelligence powered order to cash platform, invoicing. New headquarters downtown. See, there's a trend that we continue to see. Not a massive number of jobs, but 110. And I guarantee, a couple years from now, they'll be expanding that. So TD, we've all heard of them. They're opening a Western Canada wealth hub in downtown Calgary. This is where they're actually going to be training new financial planners on how to properly work with clients and the standards that they need to be following. They quoted that they chose Calgary because it was the highest population of post-secondary education people there. And then another bank, RBC, they had already opened an innovation hub in Calgary, and they were adding 300 tech jobs. And again, it comes back to that technology ecosystem. They actually reference this in Calgary, and they want to do work integrated learning. So Ernst & Young, big accounting firm, they set up a new financial hub in Calgary, and they hired over 200 people. So these big companies you continue to see time and time again. Many of these are full household names, but tons of medium and small companies as well that fly under the radar that add significantly to the economy of Calgary as well. IBM, brand new innovation hub. We had sold Gallery, which was literally a block away from this, and adding 250 new jobs to Calgary again. Well-paying jobs, downtown core, seeing this time and time again. So why are these companies setting up operations in Calgary? Well, many of the different areas have very high taxes. This is especially applicable to the US, and Calgary actually has advertisements to companies in Calgary where they can move their employers or move their employees to Calgary because we have our healthcare paid for. You pay them in Canadian dollars. We're well educated. So it can be significant cost savings for a lot of these companies. But even within Canada, Alberta has the lowest corporate tax rate in Canada. So very attractive for the workers because there's no land transfer tax when buying the home, no development charges. There's no provincial sales tax on anything that you buy. Ours is technically 7% in Ontario. Theirs is 0. There's just the 5% federal GST. And then expensive housing, coming back to that, Calgary housing, one of the lowest costs of living of all major cities. 9th in North America of all cities in Canada and the US. There's limited red tape in Alberta. We had the OMB. Almost every builder had to appeal the Toronto and GTA decisions at the OMB before. Doesn't exist in Alberta. When I talk to people and they say, what do you mean? Like, what are the caps on development charges? No, you don't understand. There aren't any. It's 0. It doesn't exist out there.
And I'll jump on, myself and Niesh have both had closings. There are no extra costs. 0. It was, I had a closing this year for an Azura, and my closing costs were $63,000. Now, part of that $63,000 was a $24,000 HST rebate, which I'll get back. So when I look at the net out number, it's $39,000. But still, $39,000 extra dollars on closing. Once I get my rebate back in 6 months from the government, that's still $39,000 gone versus zero. You know, if I work out the $39,000, where it was about 8% of my original purchase price on the investment. Again, zero in Calgary. So that means you get a better return on your investment.
Yeah, absolutely. And that 39,000 literally could be another down payment for a property in Calgary, but instead going straight to the government.
Yeah.
And that's why very few government regulations in Calgary overall, they tend to be very anti-tax and anti-government, you know, hands off. But you're seeing the government actually, you know, recruiting people across Canada. You know, Alberta is calling. We're actually seeing these campaigns. I've heard them on the radio. I've seen them online, which is pretty amazing. They're open for business. And Alberta is expected to actually lead economic growth in Canada this year and in 2023 as well. So huge things going.
Yeah, and this flows into this is not another non-sexy slide. No one will talk about this. You know, this is I love, but it's one of my favorite slides in the presentation, and something that I came across. And again, we all live in Toronto here, which when we look at the net financial number, it's not good. But when you look at debt levels of the provinces, Alberta by far has the lowest net financial debt. So in 2017, its net financial debt was under $2,500 per individual, where in 2017, it was nearly $19,000 per individual in Ontario, and the average in Canada was over $10,000. This goes into the talking point where oil and gas will always be there. And oil and gas becomes a backbone to the economy. You always get to those revenues. And speaking of that, when we look at those revenues, and because where oil and gas is, and Kyle alluded to earlier in the presentation, talking about every dollar above a certain threshold adds X number of dollars to the Alberta economy. This happened. This is not, this is what they had. They had a $13 billion surplus for their last fiscal year. And what are they going to do with that? They're going to use that to pay down their financial debt. So they're already eradicating their extra spend during the COVID times. Because they have this backbone, this revenue stream coming in, which they'll continue to have these surpluses moving forward into the future. Alberta will be in a very, very good financial position, and allows them to do enticing things to attract other industries to their economy. So they're diversifying away from oil and gas. They will always be an energy producing province because they can build other infrastructure for energy production, whether it's when you look at green energy infrastructure projects. So I don't go down too much of a rabbit hole, but here's why you won't see any new oil sands projects, okay? It comes down to what's my return on investment, okay? And this is why you saw a crash happen in oil prices. So when you look at the oil sands project, if I'm a major investor, if I'm a pension fund, or if I'm a bank or some sort of institution, and I'm investing in an oil sands project, I'm probably not seeing a return on my investment for 12 years. Versus when you talk about fracking, when fracking was in fashion, fracking, my turnaround time on my investment was much lower. The cost to invest in fracking was much lower. My output was much lower, but my timeline for return on my investment was only about a year or two. So when I'm looking at investing my money, I can have a 12-year horizon before I start seeing a return on my investment, return on my capital, or I can get it a year or two with fracking. That's why you're not going to see new massive investment in oil sands. You'll see you'll see efficiencies built in. You'll see continued development of the existing sites, but you're not going to see massive sites or massive investment back into the oil sands. But what you are going to see is you're still going to see those revenue streams from oil and gas coming in, and the royalties that come from that. And that's where the province of province of Alberta and us Canadians are going to benefit, because the federal government sees a benefit from this as well. They get a royalty as well from the oil and gas industry. So this allows Alberta to be in an advantageous situation versus the other provinces. To a lesser extent, Saskatchewan and Newfoundland, they also have gas reserves, oil and gas reserves. it allow them to diversify in their economy. And that's where we see all these tech companies continue to open up and establish themselves. So as we talked about, it's a pro investment location, no rent control, no foreign buyer tax, no land transfer tax, no provincial sales tax. You know, that again, Cal mentioned that's 7% here, zero there. No development charges, $10 billion stimulus package, including reducing corporate taxes. Sorry, I said 7, it's 8% here. Sorry, provincial sales tax is 8%, isn't it? It's 8%, right? It's 5% GST and then 8% PSC. Doesn't matter, we get taxed a lot. And $10 billion stimulus package. Why can they do a stimulus package? So they implemented the stimulus package as soon as COVID hit, because they have the financial reserves. You know, they don't have any financial issues. Their coffers are full. And now I'm going to bring Niesh in, and Niesh is going to talk about the current market environment in Calgary, and he'll be able to even share his own story from his first property closed and the appreciation he saw and the rent he's getting on that.
Yeah, so just kind of going back a little bit to all those slides that Kyle and Alex were talking about with the new job creation. Alex, you alluded to the fact that you don't think those things are sexy, but I think they're extremely sexy, because really what that does is it creates a situation where there's going to be people coming into the province. They're coming into Alberta. All these jobs that are being created, yes, some of those jobs are going to be taken by the existing population within Calgary, but a lot of those positions are going to require specialists, people with additional training, educational backgrounds to come in. And even as you see current Calgarians moving to some of these new positions, there's going to be vacancies in their existing jobs. So that's going to, again, create migration from within Canada, like we've seen all the ads that Kyle mentioned, but then also from overseas, right? So when there's an increase in population, they need somewhere to live. And that's what Alex had mentioned earlier. We are in the business of investing in roofs over heads. So we need to get in on this. It's like a perfect storm, right? Like you have people that are coming into the country or into the province. They're well educated. They're going to have money. They're going to be paid well. They need somewhere to stay. And this is really what this slide is about. Right now, the vacancy rate is less than 1%. So I'm going to say that again, it's less than 1%. So back up one more second, Alex.
Yep. Go back up.
And as a result of that, the rental market has seen a significant increase in terms of what we saw at the start of the year. Rental rates have gone up almost 30%. So when we look at markets like Vancouver or Toronto or even Montreal, yeah, there has been an increase in the rental market, but the cost of entry, the price to purchase is still extremely high. Whereas in Calgary, you're paying half, in some cases, a third of what you'd be paying in some of these other major cities. So your overhead is low, but you're still getting good rent, which allows you to benefit from the market out there, because you're not going to be losing money on a monthly basis like you can in other places right now. And you know, we're seeing a significant increase in the types of properties that are selling compared to what it looked like, you know, a year or so ago in Calgary. With the increase of the population and, you know, whether it's young professional couples coming into the city, or you're looking at small families coming in to Calgary, you're seeing a significant increase in the types of properties that are being purchased. Like the numbers are right there, 66% in condo sales year to date versus last year, and over 50% in townhouses, right? So this is a way for the city to accommodate the population, the type of people that are coming in. Of course, your single family homes are still going to be there. They're still very coveted, but unlike in previous years, you're seeing a significant boom in these other types of properties. And thankfully, we have access to these, and we'll talk about them down the road as well. Talking about the market. So the example that Alex shared earlier about myself, anyways, I purchased, I want to say, back in June of 2021. My very first purchase was a townhouse. It was in the Northeast, which is the one of the quickest growing quadrants in Calgary. I purchased that for $379,000. I closed on that property on August the 2nd, and the bank appreciated that property at $475,000. So that is almost $100,000 in just over a year. And we know that banks typically come in well below market price, right? So they came in their minds conservatively, but I was thrilled because now I just gained almost $100,000 in equity in less than a year. My down payment was 10%. You take out the mortgage on that $485,000. Now you have extra cash that you can utilize to put towards other properties, which is one of the things that I did to help kind of grow out my portfolio. And as we continue to look at the Calgary market compared to other markets in Canada, you can see even after, the interest rate spikes over the last 6 to 8 months, Calgary is probably the only market out there that hasn't seen that steep dive off a cliff that we can see in those other cities. And this is one of the slides that actually I think put things in perspective when you're looking at Calgary versus the rest of the country. And that's why we like doing these webinars, as often as we can, because you can see, like, look at the difference between Toronto and Calgary. Like, it's a meaningful difference. So we don't want to get too far into the weeds because we can have, individual conversations with people that want to kind of get into these numbers a bit more, but all the trends are pointing towards Calgary. And we're going to see that sustained growth over the next, Alex, what was it, 5, 10, 15, 20 years we're looking at the next 2 decades?
And this Calgary stayed too low for too long. And we're just starting to see the recovery of the economy now. I shouldn't say just starting to see the recovery of the economy, the recovery from the housing market, the crash that those prices saw. So there was a rain cloud across that city for so long. And that's what's so, like, again, another great slide. When you look at this, when we look at peak pricing February 2020 to August 2022, Calgary's flat. Like Lethbridge, Edmonton, like same. We're looking at flat prices here. When we start looking at other cities, that's when we start seeing pricing going down. So that I'm not worried about Calgary at all because they're just starting to come back. We tread water right now, and then we'll see another big jump coming up in the future. Go ahead, Kyle.
So the stat that blows my mind is condos have still not hit a record high from 2014.
Yeah.
And that's not even adjusting for inflation.
Yeah. And that's where we're seeing condos now. So condos in Calgary, the sales jump, so it was, you saw a jump in sales by 66% in September. And then in October, it was 27% sales increase. The number of sales increased. We're seeing like a 50% drop in sales. The number of sales in Toronto. Condos in Calgary, sales went up 66% in September and still went up 27% in October. Condos have been completely underappreciated in Calgary for a significant amount of time. And I want to add, I had these same conversations with people in Toronto in like 2014, 2015, 2016. People would say to me, Alex, why would I buy a condo? Why don't I invest in a house? Well, there are a lot of issues that come with investing in a house, and I don't have an issue with investing in a house. I own investment houses. The thing is, though, I know that they're a pain in the ass too. And what I know about most of my investors is they don't like pains. They like easy. And why do they like easy? Because they're busy. They're busy. They don't want an active investment model. And why a condo is, there's two. You can invest in a REIT and then you could have no participation like that. That's a true passive investment. But what I like about real estate and owning real estate individually is that then I can use leverage, right? So then I can leverage out equity from a property. So Niesh giving his example where his property went up by 100K, over 100K in a 1-year period. Well, then he can go to the bank and he can borrow off of that appreciation and reinvest that money into something else. If I invest in the stock market, I can't borrow against the stock to go reinvest those those proceeds. And the key thing is when I'm borrowing against those, yes, my monthly costs increase, but if I have surplus cash flow, that rent covers that off. So I'm able to match my costs with a revenue stream. And that's what I love about real estate. It's simple and boring. And that's what I like. When I look at the stock market, I get a headache. And Kyle is someone that I know that investigates things, researches things. Kyle doesn't even invest in the stock market. He has money in the stock market, but he just buys EFTs. He's like, he's like, I'm a smart guy, but there's smarter people than me out there. And he knows that if he's an individual stock investor, that there's smarter people than him out there, big, large corporations that have huge research teams that are looking for people like him so they can take his money. And what I mean, take his money is they're making a bet against his money. That's all the stock market is, bets. They're making a bet against his money and they're going to take his money off the table. That's what it is. Real estate is boring. Go right back to my first comment. We're investing in roofs over heads. We're doing a service to the community. We provide the roof, and then someone provides us with money back for providing that roof to him. And then we look for a long-term appreciation on that. That's what we do.
Alex, I still challenge you on saying that it's not sexy. I think it is. It's not boring.
Yeah, no. There are a lot of interesting stories. Okay, so Truman 22 sellout successes. So these are all projects that have been sold out over the last year, and we're continuing to see sellout projects. So people are seeing the opportunity in Calgary. The most recent being Arthur. Just last week, Arthur condo sold out. So that's the latest project that sold out, 208 units in northeast Calgary. So now I want to get into our current opportunities that we have in Calgary, and then we'll open up the floor. So Kyle will talk about Plaza condos.
Yeah, so Plaza is a fantastic building in West District, which is on the southwest part of Calgary. You're about 15 minutes to downtown. This is part of a huge master plan community, about 95 acres that Truman Homes is building there. Truman's the king of Calgary, the biggest developer there by far. This is a very exciting project because Plaza is really going to be the landmark building in that neighborhood. They've spent a lot of attention to detail and time with the exterior of the buildings, with the interior design, with the Oculus Center courtyard that's included in the building too. So this is a concrete build, it's higher end. And the really exciting part is this is the first project that we've really seen that locals are buying into. Majority of my buyers have been from the Calgary area. And they know this area. They know the wealth and money that's on the west side of Calgary and it's surrounding this. And they're actually the ones spending their money, putting their hard-earned dollars down, investing in this project. Most of the other ones have been investors from outside of the Calgary market. So that's a huge vote of confidence when you see people in the local market doing that, especially for condos. So they're offering an incredible incentive package. This is really the best incentive package I've seen in Calgary. Comes with a free underground parking space, free locker, $20,000 worth of upgrades, free condo fees for 2 years. That's just a credit at closing. Amazing rental guarantee for 2 years that includes free property management services, which makes it completely turnkey for you. It's a 2027 closing, so plus the guarantee, this is hassle-free until 2029, almost until the next decade. Okay, you can't get that really of any other projects. There's also a hassle-free exit plan too. But this project is really exciting. There's still a lot of units available, but what might be the best part is it's only 5% down until closing in 2027. So where can you do that? GTA projects, you're not really able to do that. So because of that, you're leveraging your money significantly, 20 to 1 in this case. You can buy a property with $25,000, $30,000 down in one of the best buildings in Calgary. But yeah, you're going to want to make money. And this is actually one of the highest cash flow buildings that I've seen there as well. So on the screen is Truman's analysis. We can send this to anyone that's interested as part of the investment package. Very appealing because you're getting a lot of money for the amount of rent that you need to invest. but more about the community. It's 95 acres. There's a huge new Central Park going in, has an amphitheater, skating rink, basketball courts. But again, we're coming back to jobs. There's actually a business innovation hub planned for the community. So planning over 5,000 jobs in this area. It's not just like a suburb. You don't have to leave it. You can do everything, work, shop. There's 1 million square feet of retail there. But if you have to go downtown, you're only 15-minute drive there as well. The LRT is about a 7-minute drive too, but integrated into the community are going to be several transit hubs. There's going to be bike lanes. So this is really ideal for anyone that wants to live in the neighborhood. So great from long-term rental perspectives, but also for Airbnb, because you're close enough to the downtown, but you're also only an hour away from Banff, and hotel rooms there are $400 a night. So many people can't afford that, and they're staying on the west side of Calgary too. So just opens up your options a little bit more for you. You don't have to make the decision now. You do that at closing, see what's gonna give you the most amount of money. So really exciting project.
Niesh, you're up.
Yeah, so Chelsea, this is a very, very exciting project for me, simply because I have invested in a townhouse in the Chelsea master plan community, and the product that we're showcasing right now, it's the semi-detached, the duplexes. And a little bit about Chelsea. Now, Chelsea would be considered an executive community. So for those that are in the greater Toronto area, it's really the Oakville when compared to Toronto in terms of its lifestyle, the demographic, the income. 5 years ago, the average household income was over $150,000. But I was speaking to one of my colleagues that actually live in Chestermere. She works with us in a capacity, and she was saying that now it's well over $200,000 per household, and it's gone up. And what's really exciting about this number is there's still a meaningful number of people that make, just about the $100,000 mark, which leads into the type of tenant that you'll have that will be living in these properties. Now, Chelsea itself, you're looking at a community that is under 20 minutes from downtown Calgary. It's right adjacent to the border of Calgary and Chestermere. And really, she was even telling me that it's a much faster commute than many other bigger areas within Calgary. So it just makes it a real convenient spot for people to set down roots. And Chelsea is also a community where it's family friendly, fantastic, the plaza and the Broward that Alex will talk about, but you may not get a ton of families living out there. Whereas here, 90% of the homeowners or the people that are living in these homes are families. So there's a minimum of 3 people per household. So that obviously speaks to a couple and a child. And as a result, there's infrastructure that's being put in place right now to accommodate the influx of population that we're going to see. The master plan community, it's over 300 acres. There's these semi-detached, there's single family homes, there's condos, there's townhomes. And getting back to one of the slides that Kyle showed us earlier, De Havilland, they're moving 1,500 jobs. And it's not only 1,500 jobs, it's 1,500 people that come with families. So potentially you're looking at 1,500 families that are going to be working less than 12 minutes from the site. And it's west of Chelsea, so there's really nothing there. Where would they want to live? They're not going to go further west. They're going to try to find a spot in Chelsea. And the product that we have right now is semi-detached home with a side entrance into an unfinished basement, which you can get finished, by the way, $499,000 or $509,000, depending on the size. They come with phenomenal incentives. So right out of the gate, month number 1, you get $7,500 cash back from the builder. And there's a rental assurance program that you have for 2 years where they are guaranteeing you $3,400 in rent. Now, doing the math in my head, a $500,000 home, $3,400 a month, all your costs are going to easily be covered with that $3,400, even at today's interest rates, even after the next interest rate hike that we'll probably see before the year's done. And you know that you are going to have a stable pool of tenants to draw from, because simply the amount of new positions and jobs that are going to be opening up over the next year to 3 years, people are going to need places to live. And that's why companies like Truman, well, specifically Truman, that has a vested interest in the Chestermere market, they're doing their best to develop as many of these properties as possible because they know that they're going to be short of homes. And as these individuals come into the city, whether it's, from within Canada or from overseas, they're going to need a place to live. And with this product as well, it's a 5% down payment to secure one of the, I think we have under 10 units remaining.
It's 10% down. So 5% now, 5% in 90 days.
Correct. Yeah. 5% now, 5% in 90 days. And with that, you actually get a free garage built for you in the back of the lot as well. Right now, there's just a parking pad, but you get a garage with a 10% down. Mm-hmm. And it's closing at the end of next year, leading into the first 2 quarters of 2024. So, you're not going to find an opportunity like this again. And if you want to get the basement finished, I think it's approximately $45,000. So that's going to add the potential for more income down the road through the rental avenue. And as I mentioned, I have a property that's in this community. So I know it really, really well, and certainly happy to discuss all the details about Chelsea and Chestermere with you. And certainly if you're not looking at a condo as an option, these semi-detached freeholds actually are phenomenal. I know Alex and I, we joke about, and Kyle, we joke about this all the time. Like, if we had the funds right now, we'd probably buy an entire row of these homes because we know we're going to make our cash back.
Oh yeah. And then rolling into talking about condo, a lot of people they want downtown. So when we had a gallery launch, when gallery sold out in like a week, it was crazy. And specific investors want downtown because they want to be close to those high paying tech jobs, walking distance. And so our latest downtown offering is the Bauer condos, and they're downtown. They're just a block away from the infamous Red Mile. The Red Mile is where all the restaurants and night spots are, kind of like a King West area in Calgary. So you're only a block away from that location, massive area where people watch the Flames play and everything like that. So with this location, free underground parking, $50K value, free storage locker, free suite upgrades as well, $20K, free condo fees for 2 years. You get a rental guarantee at 6% of pre-GST price. So again, this is closing in 2027. You're covered with the rental guarantee until 2029. It's 10% down. So 10% on signing balance of 5% in 30 days, and then the next 5% in 1 year. So you do get a nice runway for that second 5% down. And there aren't going to be a lot of options for downtown properties coming up in Calgary. They're very rare. If we go back to this year, we've only had one, and that was Gallery. That's it. We've had in other locations more units come up, but it's much more difficult to, an industry term, get the dirt and build the dirt in downtown. So if you are a downtown focused individual, which a lot of investors are, it's what they want to take advantage of the market downtown. They want to invest in downtown. We're not going to have another downtown location in a while. So this will be your best opportunity to get into a project downtown. So the Broward. So again, if you're interested in any of these projects, you want to book a call, you can book a time with us. Here's our information right here. But as I said, we are recording this, and you will get an email from us with the recording and all the information to book a call with us. Now